The private jet's ready for me outside? Alright, it'll be just a minute.
Yup, I'm fucking rich.
How's it going, everyone? Welcome back to my WooTube channel. It's your favorite half Asian man, Brandon Woo, and today I'm going to be talking about my Robinhood portfolio. So here we are in my Robinhood app now, and you can see we do have my total portfolio cost. So what can I say? I'm balling in the ones. I'm going to be scrolling down here a tiny bit now. Again, we do have options here, but I am going to be going over that in a different video because options can be very confusing. It's very risky, and I don't recommend doing it as a beginner. So here we are in my stocks, and the first one we're going to be going into is Apple, everyone's favorite tech giant. So as you can see, Apple is currently valued at $124.26 per share, and it has moved up a tiny bit today, so
Stocks only go up.
As you can see, I currently have 35 shares, or 35.06. I'm going to be explaining that 0.06 in just a second. You already see the market value and how much it makes up my portfolio, the 21.6. So it is pretty hefty, and eventually I am going to be trimming down as I invest more. Meaning, the more I'm investing into other companies and into the S&P 500, the portfolio diversity is going to be going down. You may be wondering what are some reasons that I have invested into Apple. Well, I have a few notes about it on why I think they can be good investments. Number one is its current market cap at $2.11 trillion. Wow, that's a lot of money. So what that means basically is they take the total number of shares outstanding in the market, they multiply it by the share price, and that is how you get that $2 trillion. So a lot of shares, a lot of share prices. Another reason is I already have Apple products. As you can see, and the ecosystem is a really big factor that a lot of people like to factor into their purchases. The ecosystem, if you don't already know, all your devices are able to communicate with each other very easily. You have AirDrop, you have instant connection with, say, AirPods, and yeah, it just makes it a really easy process, streamlined to be able to move across devices if needed. The second company I have here is Corsair Gaming. Now, Corsair has recently gone public. They released their IPO and became public in September. Let's see what date it was. September 23rd, and it started at a measly $17 per share. So I decided to pick up a bunch of them. As you can see here, I currently have 31 shares with an average cost of $19.13. So I picked it up a little while ago, and it only grew. So looking here at my total returns, close to $570. Pretty good.
Nice.
The reason I decided to invest into Corsair is it is a computer part company. So they manufacture, design, produce, all that sort of stuff. A bunch of computer parts from mice, keyboards, RAM, power supplies, flash drives, CPU and GPU fans. And another reason I am invested in them is they have made their own investments and they've bought other companies such as Elgato, which is most known for streaming devices, like the Elgato Stream Deck. And they also own Scuff Gaming, which is just controller modifications for like Xbox and PlayStation, just little extra extensions, make it so your hand isn't as cramped. Again, not a sponsor. The next company we have in my Robinhood portfolio is Johnson & Johnson, currently valued at $152.05 per share. I had bought in, it was a little late, the average price is around $148, so it's made a little bit of money, as you can see in my total returns, around $33. And you see up here that I have a Johnson & Johnson dividend incoming. So I will explain dividends towards the end of the video. A few of these other companies also have dividends, and they can be a very big factor into why you invest into certain companies. Johnson & Johnson are most well known for their research and development, as well as the manufacturing and sales of products in the healthcare sector, and they operate under consumer, pharmaceutical, and medical devices. The next company that I am invested to is everyone's favorite soda, Coca-Cola. Sorry, Pepsi, just gotta give it up to the kings.
Pepsi bottle, a Coca-Cola glass. I don't give a damn.
As you can see, I have 25 shares, around, just 6% of my portfolio, so nothing too crazy there. This also has dividends. Again, I will be explaining that towards the end of the video. And some of the reasons that I own Coca-Cola, the main reason being that they own a lot of other companies. I had written down some of them, such as Sprite, Fanta, Minute Maid, Simply, Fuse Tea, Honest Tea, Powerade, Vitamin Water, and Bart.
Another one.
So hey, next time you think you're being diverse with your soda choices, I'm sorry to tell you, but you're really not. The next company I have invested is everyone's favorite Chinese electric vehicle company, NIO. It's been a bit of a rough ride for me. Let's just like look at the 1 month. It had gone from like, let's see, 43, 48, bounced up and down, peaked at 55. Very exciting for people playing calls on NIO, and then it's been steadily dropping. But you know what they say, stocks only go up. So now it is at currently 46.50. I have around 27 shares, the average cost was around $40.56, another 6% of my portfolio. Decent returns, $160. A good reason that I'm investing in NIO, and maybe why others should do that as well, is because they are an electric vehicle company. These coming years, more and more countries are starting to adopt the idea that we should only be producing electric vehicles. So for instance, the UK signed so that starting 2030, all productions on new vehicles have to be electric only. So that's going to be a huge boost once we're making more productions of electric vehicles. We're going to be seeing less gas, more electricity. The next company we have here, this was a very recent one that I had picked up, and it's not doing too good so far, but that's because it's been going pretty steadily down. Rolls-Royce. Hey, who knew about them? Not me. So it's only marked at $1.83 per share. So I currently have 250 shares of it. Market value only being like $450. So it's literally 2% of my portfolio. It's dropped a little bit of money, but the reason that I had started to invest in it, I am in a trading group. People had brought up the idea about it. Looking at the 3 month here, looking at the 1 year, it's dropped down a bunch. Let's see. Like in December of last year, it was at $9, dropped down, after the crash, and then it continued steadily going down. However, it has been starting to make a little bit of a turnaround here in the last month. So hopefully, with time, this is a long-term investment, by the way. With time, it is going to just continue to go up, maybe where it was before, once the big no-no disease is gone and everyone can go outside and drive their fancy cars, wanting to flex on everyone by how rich they are when they don't have to pay, rent, because again, very bad crisis going on, but a lot of people have started saving, so we'll see. All right, our next one is the big hitter, the one that everyone loves to see. Everyone knows its name, not everyone loves its owner, Tesla. Elon Musk. We all know what Teslas are for. It's for Tesla. We all know what Tesla's about. It's about the Teslas, the Model S, the Model E, the Model X, the Model Y. Elon, you sly dog, you. A big reason that I am invested in the Tesla company, as you can see already, I only have 2 shares. It is quite expensive. I had purchased it at $434, and currently it's at $646, so it's just a monster. It's not stopping. Stocks only go up. The reason for this big boost of money coming in is because it is soon to be in the S&P 500, meaning it'll be one of the top 500 companies in America. Alright, this next company here, it's a bit of a speculative one. Again, we got the Foley Trazimeme. Now you may be wondering, what even is that? That was basically me this morning when I picked it up. It is a blank check company, and it's backed by William Foley, a billionaire investor and owner of everyone's favorite Las Vegas Golden Knights pro hockey team. Not a sponsorship. Unless you want to sponsor me, I'm down for anything, please. I need money. They had recently announced that they were going to merge with PaySafe, a London-based company with processing services that allow businesses to accept credit cards and transfers. So, everyone uses credit cards. Everyone's transferring money. So it's pretty big. Hopefully it's going to be jumping up, as you can see on my screen. It's in the green, just comparing to literally last week when a big jump from 1050 up to like 12 up to 13. So, and this was only with plans to be merging. So if it actually does go through, we could probably see a big boost in it. And the final one that I am invested in, not really a company, or I guess it is a company. It's the Vanguard S&P 500 ETF, also known as VOO. If you don't already know, ETFs and index funds are really nice things to be investing into because oftentimes they are growing as the market grows itself. So if you have an index fund or an ETF, exchange traded fund, following the S&P 500. As the S&P 500 grows, so does that index fund. So it's really nice to be able to invest in that. You're going to be following some real nice profits. As you can see, I have roughly 20 shares with an average cost of $311, and total returns been about $600 so far. And this isn't without anything crazy, because the market's going to continuously grow. Sure, there will be dips, sure, there will be crashes, but overall, the market will continue to go upwards. So it's really nice to be investing in that, and I highly recommend for long-term investing, you invest into any sort of index fund or ETF. Just a disclaimer, everyone, I am not a financial advisor, so please don't sue me if you do not make money. So, a dividend is a sum of money paid regularly, typically quarterly, by a company to its shareholders out of its profits or reserves. So basically what that means is a company makes a certain amount of money every year, every quarter, they give a little bit of money that they made from profits back to their shareholders and investors. So someone like me, someone like you, someone like my cameraman Dalen. So you may be wondering, how do I figure out the price that I'm going to get per dividend for each company? Well, it's pretty simple. You just go to the company. So we're going to go to Apple first, and we're going to scroll down until we see the stats. Towards the bottom right, you see div/yield. That's simply dividend per yield. So you see 0.66. What that means is that's a percentage right there. So 0.66% of the price of Apple, so 124. And then that's going to be the amount of dividends that you get paid per year, 4 times a year, so quarterly. So for instance, let's just go to Coca-Cola really quick as well, because I have the numbers up on it. You can see that it has a dividend yield of 3.05, meaning the annual dividend is $1.64, and it's paid out quarterly, so I was getting 41 cents for each one. Thank you so much for watching this video. Don't forget to like, subscribe, share it with all your friends, and well, if you need me, I have a private jet waiting for me.